Hello and welcome to another update video on ADA. Before we dive into the nanostructures, I wanted to take a moment, take a look at the bigger picture for you. And as you can clearly see, we are still tracking here on the daily time frame this triangle pattern. It is not very well defined, but it can be interpreted as an Elliott wave triangle in our white scenario with potentially an upside breakout still to come, which might take the price into the $1.70 plus area. In this triangle, we're tracking an A wave, a B wave, a C wave, a D wave. That might still be unfolding. I think it would look good with one more high. That's what we've been talking about for the last few weeks. And then an E wave could happen. That should be a higher low. And the price should hold above the February low for that, to keep this scenario alive, the February and the April low actually. 51 cents is the relevant support level in this case for the triangle to hold, because we're tracking, don't get me wrong, we're tracking micro support levels on the smaller time frame, absolutely, but to keep the broader bullish wave count here with a triangle pattern alive, we need to hold above that 51 cent level. I mean, that is the invalidation point. The micro support levels can be used, let's say, in addition on the smaller time frame, but it really matters that the 51 cent level holds. That's key. Now, there is no sign at the moment that we have put a larger top in place, which is basically moving sideways. It is a pretty boring chart right now. The situation hasn't changed, so the analysis remains very, very consistent. It has remained consistent for the last few months. You know, sometimes people get confused about the microstructures and everything, and I often say, you know, and you need to understand the context first, the bigger picture. And I've been telling you for, I think, the last couple of months that we're likely in a triangle. So with a triangle of that size, we did not expect a direct breakout, right? Which you know, if you followed the videos over the last few months. Now, the risk, I always try to be honest, right? I always try to be honest. The risk of someone making videos about an ADA chart, telling you that not much is going to happen and that we're in a range, it's just people stop watching it, right? People love the hype. But that's not what MCO is, right? I always try to be honest, give you the structures as they are, and I hope it helps some people, right? I know it is frustrating because it's just sideways action, but with a triangle, that's exactly what we expected. This triangle has been highlighted already, I think, in February or March. So yeah, we've been warned that it's going to be boring. But still, we try to make sense of the nanostructures as well. Now, you'll find a lot of people out there who are hyping this chart and talk about crazy price targets. I mean, you can listen to them if you want to, but that's just not honest, right? It's just not honest. The price should go higher as long as we're holding above 51 cents, absolutely. But then again, let's first get this triangle completed. Yeah, I'm always a huge fan of staying in the present, staying in the now. What is the price doing now? Do we have any impulsive price action? No. Are we still holding above support? Yes. But we are also in a range. So the upper range boundary is at around $1.17. So it takes a break above the $1.17 level to suggest that we get a more direct upside breakout. Let's take a look at the shorter time frame now. Here on this chart, we're currently holding this micro support area. As I said, we do use Fibonacci support areas in addition. It's holding so far. So price respected it on the 19th of May. Price rallied but could not break above the previous high. But we're still consolidating between micro resistance and micro support. So the nearest resistance area within the larger range we just talked about, the nearest resistance area is between 78.3 cents and 82.7 cents. It would take a break above this area to suggest we are going higher more directly. And I would still like to see the price overall reach 94.5 cents or so in this wave D. Even though it's not a must. I mean, we're talking here on a very detailed level. So there is no stability in this structure, right? This is all corrective. At the moment, that means we need a break above this resistance area to get a good indication the next leg up has begun. Until then, a broader correction is still possible, or just range-bound movement. We haven't seen really any impulsive price action from any of the recent lows. So from the 19th of May low, that was a three-wave move up. This here at the moment is also not a very exciting move up from the Sunday low. So we have to remain a bit patient, but the levels are clearly defined. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.